What would you do if you knew the next global financial crisis was just around the corner? Would you tighten your wallet and hope you can save your way to safety? Would you take a high-risk bet that could make you millions or wipe you out altogether? Would you rush to reallocate your investments to more passive income-generating assets? Or would you know the 8 silver bullet secrets to survive and thrive in economic crises and come out many times richer and stabler? If that last option sounds great, but you aren't quite sure what those 8 secrets are or how to execute them, then have no fear, because you've come to the right place, as that's exactly what we're going to unpack in this video. Oh, and if you're new here, welcome or welcome back to Early Stage Crypto, the channel where we delve into the strategies and secrets of the world's top investors. Today we're unpacking the shocking secrets of how to not only survive, but thrive during economic crises, straight from the legendary financial mastermind Jim Rickards, who's a pro at navigating economic turmoil. If you want to learn how to turn chaos into opportunity, stick around, because we're going to be unpacking the secrets that will make millionaires, while others will be chasing their tails as their savings dwindles, all because they got these 8 factors wrong. First up, let's talk about asset allocation and diversification. Think of this as your ultimate safety net during economic downturns. When the market tanks, having all your money in one place can spell disaster. Diversifying your investments across various asset classes can help mitigate risks and ensure you don't suffer catastrophic losses, so this is a must. Jim Rickards is a huge advocate for a balanced portfolio, so his strategy echoes that to a T. Here's his specific recipe for success, and yes, you can copy-paste this portfolio allocation into your own investment strategy and be off to the races of positive returns when everyone else is running for the hills in fear. 10% in gold, 30% in cash, 20% in real estate, 20% in fine art, 20% in alternative investments like hedge funds or private equity. This mix ensures you're covered no matter what the market throws at you. Here are 3 actionable tips to achieve this first step. First, take a look at your current portfolio. Are you too concentrated in one area? It's time to diversify. Second, start by adding different asset classes based on Rickards' recommended allocation. Third, make it a habit to rebalance your portfolio regularly to maintain your desired allocation. Next, let's talk about gold. This isn't just about shiny coins. Gold is a timeless safe haven. Why gold? Gold is a hedge against inflation, currency devaluation, and market uncertainty. Its value often rises when other investments falter, making it a crucial part of any crisis-proof portfolio. Therefore, Rickards suggests holding at least 10% of your portfolio in physical gold. He prefers gold bullion over ETFs or mining stocks to avoid counterparty risks. Here are 3 actionable tips to get started with gold. First, start small. Purchase some gold coins or bars from a reputable dealer. Second, store your gold securely, whether in a home safe or a professional vault. Third, remember you don't need to go overboard. 10 to 15% of your portfolio in gold is a good balance. Let's move on to liquidity. In times of crisis, liquidity key can be your best friend. Having liquid assets, or those that can be easily and quickly converted into cash, means you can quickly respond to market changes, cover emergencies, and take advantage of undervalued investments. Since this video is Jim Rickards' strategy to survive and thrive in economic downturns, this one might seem a bit extreme, but Rickards recommends keeping 30% of your portfolio in cash or cash equivalents. To some of you, this might seem like a lot, but it gives you the flexibility to act quickly when opportunities arise, which is exactly what you want and need during economic volatility and downturns. Here are 3 simple steps to accomplish this strategy. First, keep a significant portion of your savings in high-yield savings accounts or money market funds. Second, avoid tying up too much capital in long-term investments that can't be easily liquidated. Third, regularly review your liquidity position to ensure you can cover unexpected expenses. On a completely different note, let's talk about secret number 4, which is staying informed about geopolitical events and market trends and stiff. Some of you may be news and markets junkies, while others may find it as boring as watching paint dry, but the truth is that being informed during unprecedented economic times and unpredictable swings is vital to financial survival, as geopolitical events can have a massive impact on markets. Understanding these dynamics helps you anticipate changes and adjust your strategy accordingly. Jim Rickards uses a combination of economic analysis, geopolitical insights, and intelligence reports to make informed decisions. He emphasizes the importance of being well-read and staying updated with global events, which is something we can all do by following reputable news sources and financial analysts, reading books and articles by experts in economics and geopolitics, and attending webinars, seminars, and conferences to gain deeper insights and network with other informed investors. Into secret number 5, let's talk about hedging against downside risk. Hedging is your shield during market volatility. During economic crises, market volatility can lead to significant losses. Hedging helps protect your portfolio from these downturns. Rickards recommends using options, inverse ETFs, and safe haven assets to hedge against downside risk. These tools can provide protection and even profit from market declines. As proper hedging strategies can be complex and advanced, we have 3 actionable suggestions you can start to implement. First, learn the basics of options trading and consider buying put options to protect against potential losses in your stock holdings. Second, invest in inverse ETFs that gain value when the market declines. Third, allocate a portion of your portfolio to safe haven assets like gold and cash. As for secret number 6, this is all about long-term thinking. Simply put, maintaining a long-term perspective can help you stay focused and avoid panic during crises. Economic crises are often temporary, but the decisions you make can have long-lasting effects. Staying focused on your long-term goals helps you make rational decisions. Jim Rickards emphasizes the importance of thinking beyond the immediate turmoil. He advises focusing on long-term trends and opportunities rather than getting caught up in short-term volatility. Though this strategy might be easier said than done, there are 3 steps we'd advise. First, set clear long-term financial goals and create a plan to achieve them. Second, avoid making impulsive decisions based on short-term market movements. Third, regularly review your progress and adjust your strategy as needed to stay on track. Rickards' secret number 7 combats the fact that the financial world is constantly evolving and staying informed is crucial for success. Rickards is a voracious reader and lifelong learner and advises investors to continuously educate themselves by reading books, attending seminars, and engaging with other experts. Once again, you can accomplish this by setting aside a little time each week and consuming free educational finance, news, and market-related content. In fact, without even realizing it, you're doing that right now, and continuing to binge our early-stage crypto channel will do the same, but that's enough for the shameless self-promo. Let's move on to Rickards' secret number 8, which is all about the role of alternative investments and the best way to diversify. Rather than sticking to the basics of stocks and bonds, alternative investments can provide unique opportunities and diversification benefits. Assets like hedge funds, private equity, and fine art can offer returns that are uncorrelated with traditional investments, reducing overall portfolio risk. Jim Rickards allocates a portion of his portfolio to alternative investments. He looks for opportunities that have the potential for high returns but also provide a hedge against traditional market risks. Though these alternative assets may have some added requirements and barriers to entry for some investors, they're worth looking into to determine if and how you can add them into your own portfolio. That said, if you're still not sure these 8 secrets will be enough to save your financial ship in the upcoming economic crisis, then perhaps you'd like to hear what Rick Rule says about the 5 contrarian resource investments that most people are sleeping on and that can make you millions in 2024. If so, click this video over here and give it a watch, or if you're thinking of brushing up on your trading skills and are excited to face the next bout of market volatility with a killer trading strategy yourself, then check out our recent overview of Paul Tudor Jones' 9 contrarian trading tips that you can start employing today. Oh, and do us a quick favor and smash the like button, hit subscribe, and let us know in the comments below if you have any secret tactics for surviving the next economic downturn. We'd love to hear from our community of fellow early-stage investors down below.